just want you to close your eyes and imagine the perfect situation. You walk into a house, kitchen is ready, bathrooms are remodeled, the floors are bamboo. Now, is that reality?
Depends.
So now, what if you had a product, even though the house may not be like that, what if that magic wand was a loan that can make that home that way?
Yeah. People are like, we like, hey, renovation loan.
Right.
Sherry has a client, she sees a house all messed up. Like, oh, don't worry, we'll get you a new kitchen, new basement, new everything, right? Jose's like, yeah, don't worry. But what I don't like about the 203K.
Yeah, please.
If I gotta put change some cabinets in the bathroom, or do some tile work, does it really need to be licensed, man? And those guys, they come and say, oh, I'm getting to a 3K. Guess what happens? They right away, they think they double the price. It's like dollar signs go in their mind.
Sure.
So the contractor, no offense, all the contractors out there, but they charge it more than because they got to deal with the bank as well. They're like, hey, the bank's a pain in the ass, Greg. Bullshit,
Greg, when I do these seminars, I always ask, who's done a renovation loan and why do you hate them? Because you got to get the real stuff out, and that's what you guys want to hear. So
look what happened to Sherry. Walked out.
All right, so we are on episode 42 at XR. And today I'm so excited because we have Jose Valdovinos from Cross Country Mortgage. I've known him for many, many years. I'm so excited. We have Greg. You know Greg. Everybody knows Greg, managing broker, XR Realty. So I'm excited to be here with him as well. And then we have Greg, and he's from construction, the
Pegasus Construction.
And he's also a HUD Consultant. So we're going to get a lot of things about renovation loans, about HUD Consulting, and then brokers that have to deal with all of that all at once. Nice. So excited. Thanks for coming, guys.
Thank you for having us.
With my hand.
Why you're all too excited about this dealing all at once? Like, what's so?
Well, Greg, she's around four handsome gentlemen, how can she not be excited?
And today, really, I want to get down to the wire about renovation loans because a lot of people don't really work with renovation loans and they don't understand the process. So Jose is here to kind of explain that, kind of let us know. I've done renovations myself. I know you've done a few. Greg is the HUD consultant. So maybe Jose can start us off on what he does.
So we're doing, So, okay, go ahead. Let's.
Yeah, well, and look, for me, it's about, I just want you to close your eyes and imagine the perfect situation. You walk into a house and you don't have to do anything to that house. The kitchen is ready, the bathrooms are remodeled, the floors are bamboo, and it's in great condition because you're going to also be able to park your car and not have to worry about it. Now, is that reality?
Depends.
It depends, right? Yeah. So now, what if you had a product that, even though the house may not be like that, you don't have that magic wand? What if that magic wand was a loan that can make that home that way?
Okay.
That's what we're going to talk about today.
Okay.
So I don't want to go too deep into it. We're going to have a conversation around it.
Okay.
And like you said, Greg, we're going to challenge ourselves a little bit from the lending side, from the real estate side, and the construction side.
Okay. So how long you been in the business? Just so I know, we just started and I want to get the viewers to know each other, right? So today we want to be like a little bit more educational. People are watching, right?
Yeah.
Why would they call you?
Yeah, right? Great question.
I mean, they already questioned me. Yeah. I don't even know why they called me. So go ahead.
Nah, so I've been doing this for 25 years.
Okay, nice.
So I started in the finance industry when I had a lot more hair like you, Greg, and I've lost it all since. But that's a true sign of being weathering over 2 decades of financial storms. I would say I've gone through quite a bit, and renovation financing for me became a passion of mine over 20 years ago.
Okay. So you concentrated more on renovation, or you do it all, right?
I do it all. I do all renovation loans. I do all mortgage loans, but renovation is really where my bread and butter is. I really love that. That piece.
Nice. So that's how you met Greg here.
That's right.
On the left.
Yep.
So tell us about you, Greg.
Sure. So I've been, I started in construction in '96. I started as a freshman entering in high school that summer.
Wow.
My dad, I was sitting around. Dad's like, you got to go to work. Put me in touch with somebody who was a contractor.
96, you were 5 years old?
I was 14. I was 14 years old.
Nice.
Child labor, here we go.
Child labor, I love it.
So I was a laborer back then, worked my way up into a carpenter, hurt my back in 2004, started general contracting since 2004. So I've been in this for over about 21 years as a
Okay.
general contractor. Seen a lot, gone through 2008, that bath that we had, and then a lot of these changes in the markets. So yeah, been in the trenches for a good long time.
So how do you get to meet Jose? Like what's your connection? Because today you're here because Jose,
Right.
And you have a connection with Sherry for a long time.
That's right.
And so we're just curious.
So a lot of our stuff is done by relationship and relationship business. So I actually place cold calls to loan officers, real estate agents, that kind of stuff. Because you guys, we don't compete, and you guys frankly need a guy like me. You know, so I called up Jose when I was doing my rounds and my calls and kind of just let him know we're launching a new program that can help out on the construction side for lenders and also real estate agents. And I picked up the phone with Jose. We hit it off.
So you called more for the construction company, right?
Yeah.
You are a HUD consultant.
Yeah, we're also a HUD consultant. Yeah, we cover that aspect. We do some consulting on another side too for banks and hedge funds, that kind
So
of stuff.
how do you become a HUD consultant? Like how does that work? Like
So it's really
because people get confused. Sorry to interrupt.
Yeah.
You know, people are like, we like, hey, renovation loan. Sherry has a client. She brings them to she sees a house all messed up. Like, oh, don't worry. We'll get you a new kitchen, new basement, new everything, right? Jose's like, yeah, don't worry. But he's like that. Wait a second. I got to call the HUD consultant.
Right.
Right. To
That's
get
exactly
to
right.
get an idea.
Yes.
And now that's where you come in.
So HUD consultant, to become a HUD consultant, it's really not that difficult. You do need experience. I believe it's 3 years of experience in a surrounding industry.
Okay.
And then you submit your paperwork to, it's really a federal program.
Okay.
So you submit it to somewhere, I think that's in like Louisiana.
Okay.
And they go through it. They give you it. You don't need insurance. You don't need any of that stuff.
Yeah, yeah.
And then you just kind of apply for it.
Okay.
And you get it. There's really not that big of a barrier.
Are you like the supervisor? Like, because you're the HUD consultant, right? And then you get, let's say, I don't know, we get a construction company doing the job, right? And then you are like kind of like supervising.
We're like the liaison, right? So we're like the liaison between the bank. We're really hired by the homeowner and the bank to step in between and monitor the construction company.
Okay.
Right?
Okay.
Doing the work. So we're there to make sure that they're not, the contractor is doing what he's supposed to via the bank, the draws, the money, all that kind of stuff.
So then you're giving the estimate to a Jose, right? How much his project is approximately what it could cost. And then what do you get? What do you do?
Greg is like the glue that keeps it all together.
Okay.
And it's important. Just like anything else that you do, a good team will get the job done. And so he's a critical part of that team.
Okay.
You know, just as much as a realtor is. If we're all, rowing in the same direction, we're going to get there. And I think a renovation loan, it's critical to have the right team.
Okay.
And so with the HUD consultant piece, his job is really to outline what the property needs. He does three things. You guys ever hear of the A-Team, the show back from the 90s? Mr. T, but I call it Mr. D, mandatory, recommended, and
Brackets.
and and
that.
desired repairs. So
Okay.
a mandatory repair that Greg might call out is hey, the
yeah.
roof's falling down, right? A recommended repair could be hey, that
A must.
a
So
must.
A must
Exactly.
repair. Okay.
Yeah.
Because people like, don't get me wrong. I represent a lot of buyers, right?
Yep.
Well, throughout the years, like Sherry too, and people get worried sometimes when they hear like 203K renovation loan, right? They feel like, oh my God, is it gonna cost an arm and a leg?
Right. Yeah.
So that's why, we could talk about the fancy words here and make it all nice and bubbly, right?
Yes.
But at the end of the day, it's numbers.
It is numbers, and for me, it's a conversation. It's about opening the mind. It's not for everyone, right, Sherry? I would say that when I got involved in this type of financing, I fell in love with it because this is the next best thing to new construction, Greg.
Okay.
Because where else can you buy a property as is and get money to fix it all in one loan immediately after closing?
Okay. So let's say there's a house for $100,000. I just want to make a quick example for a client. $100,000. They're buying it. It needs $200,000 in work.
Yes.
And Greg is going to come and say, hey, this is all the, here's the estimate. This is what you need. This is the must. So you're just going to give them $300,000? Like, how does it work?
Great question.
How does it work from there?
Yeah, I'll walk you through it. So you found the property as is for $100,000.
Okay.
And just to take a step back, Sherry will send me a client, let's say, and I approve them for $300,000. I'll say, hey, Carlos, you're approved for $300,000. Go out and find a property for $300,000, move in ready.
Okay.
Or find a property that between the purchase price and the rehab don't exceed $300,000. So in your example,
Okay.
100,000 purchase price and another 200 in rehab gets us to within that budget that we need to stay in. And two things that we're looking for: you're not over improving the property for the area.
Okay. So it needs to appraise out.
It needs to appraise out
Okay.
in the after repair value condition of the
Okay.
property.
Okay. But that's hard too sometimes, right?
It is.
'Cause
And-
right now, like say in this market where it's tight, where
is.
things maybe are even overpriced, and then all of a sudden I got to add another 100,000,
That's where a good realtor
right?
that
We really need-
negotiates
you
up
really need
front
your
the
help.
right
We really
way.
need your
That's
guys'
true.
help.
That's
Yeah.
true.
Yeah.
That's true. But it's demand
Comes in.
But it's demand and supply.
Demand
The
and
realtor,
supply.
you know, if there's a lot of demand, the realtor is
Yeah.
so
One
much.
thing that a lot
so
of
much
people
you
don't
can do.
know, is the FHA allows us to finance up to 110%
100. Okay, that's
of
really
the
good.
after repair value. So in your
really good.
example,
Okay.
in that $300,000 example, Greg, even if my after repair value came in at 270,
Okay.
I'm still okay.
That's not bad.
Yeah,
Yeah.
I'm still in good shape. So a couple things that we're looking for: you're not over improving the property for the area,
Okay.
and that the budget is within reason. That's where someone like Greg comes in
Yeah.
to make
Yeah,
sure.
and
that
you guys,
the
you
budget's
guys will
there.
help us, right? The buyer's agent will help us. Like, hey, if we're putting on or we're redoing the kitchen, or even if we're expanding square
We
footage,
can-
right?
yeah.
You guys can give us somewhat of a BPO of like, okay, if we're doing this, then that a valued property that helps out a lot before they end up having to go get
Correct.
like an appraisal, right?
Correct.
Because we don't want to go down the appraisal and find out,
We don't want to
you
get
know?
to right, Sherry. Like you have situations where like you know exact kind of where if he gives you an estimate of 100,000, you're like, hey man, you can't put more than 50,000.
Yeah.
Then you could go back to the list. And-
Right. With
Okay.
my experience, I actually liked my experience. It was a
Okay.
good experience because
had
my
your own experience? Like
yes,
you did it
I did a
yourself?
renovation loan
Okay.
with Jose.
Yes.
Okay.
And he's done a lot of my loans, a lot of
was
my
a great
personal
customer.
loans.
She had all her paperwork.
Yes, all my paperwork. But my experience with the
This
renovation
is
loan
great. I'm going to ask you a lot of
was
questions
really,
right now.
really good because my contractor worked out on me.
Nice.
So the contractor does not get paid if they walk out because they have to finish the job to actually get paid. So it's in, it's in steps. The HUD consultant comes in and says, okay, the roof is done. I'm going to release $10,000 from the bank and they get paid that $10,000, which the roof is a lot more now, but I'm just giving an experience, my experience, $10,000 for the roof. And then they come in, the electrical's done. You release another $5,000. Then the plumbing's done. So they come in, but you don't want to get the HUD consultant there too many times because you also get charged every time they come. So you have to be really careful about getting the HUD consultant there.
So question for
So-
you. Sorry to interrupt you. So the
Yeah.
HUD consultant, Mr. Greg, does everybody needs to be licensed and bonded?
For which?
All these contractors.
So the
that
contractors
Sherry
need to,
hired.
so the lender will provide basically what their requirements are.
Okay.
Right. So a contractor has to go through a check to be set up through the lender. Right. So we have to a lot of times go through an experience and somewhat of
So
a
the
background
contractor
check.
needs to be checked out by you.
Correct. We
Right.
validate them. We check their
License,
license,
bonded,
insured,
and
and bonded.
insured.
Yep.
Yeah. So there's a little bit of a backstop there to kind of
Okay.
help out with the
Okay.
contractor part.
So in my experience, this is one of my what I don't like
Yeah.
about the 203K.
Yeah, please.
Because you guys are requiring all those contracts to need to be like, don't get me wrong. There's some projects that I do need the licensed person because he's doing a beam or, I'm expanding an area where I gotta, put a beam and knock down walls
Right.
or there's a structure issue, right? I want to license and bond it.
Yeah.
But if I gotta change some cabinets in the bathroom, or do some tile work, does it really need to be licensed, man? And those guys, they come and say, oh, I'm getting to a 3K. Guess what happens? They right away, they think they double the price. It's like dollar signs go in their mind.
Sure.
So the contractor, no offense, all the contractors out there, even you guys, but they charge it more than because they got to deal with the bank.
Sure.
As well. They're like, hey, the bank is a pain in the ass, Greg.
Yeah.
And I got to charge more.
I'm gonna
do
let
you
your
Tell me.
twin name brother over there handle a little bit of that.
Tell me.
Listen,
I want to be real with the public.
hey.
We can go around the bush like say,
No.
it's nice, it's beautiful, and then a bunch of bullshit.
Greg, when I do these seminars, I always ask
Go.
who's done a renovation loan and why do you hate them? Because you got to get the real stuff out, and that's what you guys want to hear. So
Look
Greg,
what happened to Sherry. It walked out. The person
Yeah,
walked
she-
out. So
I know it works for a lot of people. It doesn't work for some. But but it works for a lot of people.
Okay.
So how do you handle that, Greg?
So on my side, as a contractor as well, so I'll speak to it as that. I would say that there's a big misnomer in just how people run their business, right? So we run our business in the construction side as if we were doing a loan that a bank is doing anyway. Right. So then it's just for us, it's just uniform, right? It's a uniform process. Whether we get a loan from here, they're paying cash. Everything's just a process to us.
Matter.
So we just kind of put our thing together. But there is a misnomer out there on your side
Yes.
of that, like, oh, I got to deal with the bank. And it's whether you're dealing with just a construction loan, which you're going through title, or a 203K loan. The only difference is they're putting in a 203K consultant, but you don't have the other bank. So it's really not different than another construction loan, but everybody wants to blow this thing out of proportion, right? And then justify how they can charge you more for it.
Correct.
But there isn't. There's nothing there that should be like that.
It shouldn't be.
As long as they have their process in there to be able to do a project properly.
Okay, I got it. Okay, because you guys do all across the board the same way. You know, not changing your estimate based because of 2 or 3K, or if it's a cash guy paying you on this. You know what I mean?
I mean, if you're borrowing money from a bank, you're borrowing money, you're going through the same checks.
Okay.
Whether it's from a title company to release money, or it's through a HUD consultant to release money.
Okay.
Frankly, there's more work on without HUD consultants because then we have to provide waivers.
Correct.
Right. So it's harder to do it the other way. So it might as well just do everything.
Can you mix it up where you have, like, let's say, you know, you have a licensed contractor, you got, you know, Greg on the construction side, and then I have my, you know, Uncle Pasquale doing my bathrooms.
Uncle
Can we mix it up, or can we do that?
cannot do this.
The first problem is Pasquale.
Yeah, is that what it
Okay.
is?
Yeah, tell him. That's the first problem.
For us, it's Primo Pepe.
That's right.
You know?
Yes.
Yeah, we don't want
His
Primo over there.
uncle and
No,
the Godfather.
We like the primo.
we do like Primos. Depends on what they're bringing to the party.
Yeah.
You know, like Sherry, she brought some amazing sandwiches today. We like her a little more today. So, you know, no.
Or can it maybe
Self-help,
self-help?
family.
No.
It's frowned upon. Are things happening behind the scenes? Maybe, but we validate the general contractor, and we expect that they're putting their license and that they're doing the work like they say they were.
So if you're paying for your own thing and you're not doing it out of the bank, right, and you want to do something that's different, then it's out of the bank's control, right?
Yeah.
But then you're responsible for it,
Correct.
right? So if you were like, hey, I'm gonna do all this work through the bank and provide all this money, and then I'm gonna have my uncle come out and do the backyard, and you're going to pay for that directly, the bank's not.
The bank
really,
is just it's not going to pay for it. That's pretty much it.
So that's where the bank is involved in that.
Yeah.
They would rather have everybody under one because they can police it a little bit better.
I think the biggest thing is you got to surround yourself with a good team,
That's right.
with a good construction company, with good people that you could trust, have good reviews. You know, they're really upfront, not like what Sherry happened. Somebody walked out, you know, from her job site. I think that's the key.
Yeah, and things
in this whole
happen.
process.
And I'm so glad you brought that up, Greg, because I'll tell you why it's important to have a consultant on a job. Because Sherry got us a bid, a contractor's bid, and we had to, consultant had to actually validate that the contractor's budget was adequate to get the job done.
Got it.
God forbid the contractor walks out, gets hit by a bus, and now we got to bring another contractor. They got to be able to get the job done with the budget we have in place. Would you agree with that, Greg? Right?
Got it. Okay.
So that's why that's in place.
That's good. So what happened with you, Sherry? Your experience. Let's go back to your experience. Like, you know, so you walked out, you got a new guy. What happened?
I got a new, no, I kept pursuing the same guy because.
So you got him back?
Yeah, I got him back, but it took a while. I mean, it took a long time.
Was this a flip for you? What did you do?
It was a flip.
It was a flip? Okay.
Yes.
You made money? I mean,
Yes.
we're open book yet.
We made money. We made money, not as much as I wanted to make because it took longer. And the longer it takes, you have to pay mortgage, you have to pay fees. So yeah, we made some money, but unfortunately, it wasn't as much as I wanted to. But it could have been a really good one if that one.
But sometimes you learn from the first one.
Yes, and you continue learning.
Yeah, every day. Okay, that's good. What about question for you? Because, you know, we could talk, and you too, right? Is a 203K are nice, they're fun, but in a competitive market, if I have a seller, you know, Grandma Sally selling her house with Realtor Betty from Berkshire, they see an offer with 203K, they don't like it.
Sure.
They're like, I don't want to waste my time with these guys.
That's
I mean,
a great point.
It's the truth.
It's fair.
Unless
And-
it's sold as is. Sometimes say 2 or 3K comes into play because there's some houses that are looking for as is,
That's
and they
true,
don't want to
but-
repair a lot of
But when they're priced
Especially-
really well, sorry
Yeah.
to interrupt you, when they're priced
Yeah.
well, where you could afford to do the 203K and put that
Yeah.
money on top and have a good appraisal, usually those is really competitive. You get
Yeah.
the cash offer, you get the investor,
Yeah.
you get Greg Cerrone coming with money down,
He's top guy.
and close in 2 weeks and waive inspection.
Yeah.
And then you got Sherry coming with Jose. Mm-hmm. Hey,
Yeah,
I got
it's-
203K. I need 45 days. I need to bring Greg. I need to get an estimate. Betty's saying, I'm just saying, like,
Betty
what's your
says,
experience?
does Jose know how to dance?
That's right. That's right. Yes.
Can you dance?
I
you
can
dance?
dance,
All right,
actually.
let's go.
Yes. I'll throw down with some salsa and some cumbia. Let's go.
There you go.
No.
So
and
what do
I-
you do to dance?
and I-
What's your promising?
Well,
Like, how
here's-
do you make the deal smoother?
Here's
you know?
a lot of work before we even get to the table, Greg. I'm so
Okay.
glad you brought that up.
Okay, tell me.
Because we're sitting with the client way in advance of them actually going out and finding a property. So we're saying, hey,
Okay.
I need to look at, we're not just pre-qualifying you or pre-approving you. I need you to bring me all your paperwork. I'm sending you to an underwriter, getting you fully vetted and done. And all we need, and I need you to look for a contractor before you actually need one. That's the thing I always tell
Okay.
homeowners. I say, we don't want to be looking for a contractor when you're out there shopping. I want you to have 3 in your back pocket ready to go.
Okay.
So that if you do
That's
find
good.
something during the inspection period, get them out there and get bids together.
What are the time frame for this whole thing? Like if they have everything set up
Yep.
and they have everything on,
Sure. And this is
lined
where
up, what's your time frame to close?
the fastest I've closed a 203K is 21 days.
Okay, that's really good.
Yeah, I've done it in 21 days, and I'll tell you why. Because I had the contractor ready to go.
Okay.
He got me the bid within 48 hours.
Okay.
I got the consultant's report that's right soon after, and then I got the appraisal company out there within that first week.
Okay, that's really good.
Yeah, and all the underwriting of the file was already done. So really, there was nothing to do but the appraisal and the title work and insurance.
Yeah. Okay, that was pretty fast.
Yeah. And we do them all the time. And look, not every lender can say that. And some can say that and brag about it, but I've actually done it for 20 years.
Okay.
So I know how to put the team together to get it done.
And Jose also has connections with contractors as well.
Right.
Where he doesn't give you one, he gives you 3, 4, 5 different contractors that you can work with as well.
Exactly.
So it's easy when it comes to that part because he can get you connected and understand and work.
So
through
some of the
it.
time frame that is in the 203K loans, or even in a construction loan,
Okay.
is really boiled down to basically getting all the numbers right? So we need to know before they close on the loan. This is more for client protection and home buyer
Okay.
protection, right? So, and that's why we're a 203K consultant, right?
Yeah,
we
yeah,
feel
yeah,
that
yeah.
there's a lot of stuff out there.
Of
We want to
course.
make sure that we
Right.
do our part to try and police the industry. So that's part of our thought is, but a lot of that time frame that comes down to it is to get the numbers and the actual numbers, right? So there's an opportunity out there that if you don't have the contractor in there actually bidding it, there's no real industry standard cost, right? So you have to bid out for who's doing the project. And that takes time,
Yeah.
right? For them to research that. If it's just, you're doing just a smaller project, you're replacing the furnace and you're replacing a roof, it's like 2 guys you got to talk to.
Not a big deal.
Right? Like I can get those numbers really quick and get them turned around.
Yeah.
But if we're doing we do a lot of additions, we do a lot of gut rehabs
Nice.
where we're all the way down.
Wow.
Right? Like that's a lot of time
That's
to
a
find out.
Yeah.
And that takes some time to get
does.
that there, right? And
does.
those are the things that really, I think, slow down for your seller is we want to make sure that we have all the numbers together so that we don't hurt the client
Yeah,
once they
makes
take
sense.
the loan and there's not enough money
Makes
or there's those problems.
Yeah. What about another example?
Mm-hmm.
I'm gonna just try it out there. What about a purchase as a normal? Can you just do a regular loan, and then after they close, put a 2 or 3K in it?
Yes, absolutely. I have a lot of those type of buyers.
Let's just go in,
yes.
win, right?
Yes.
Deal with Betty and Sally there.
Yes.
Win, and then do a 2 or 3. Can you?
You
do
can.
That?
Yeah, you can do a refinance and renovate after close. I have people that buy
Refinance,
cash.
Okay.
And then come back and do put a loan on the property and get money to rehab.
Okay. The refinance is good, but I'm just thinking about dollars, right?
Right.
Then you got charge of the, first loan charge, and you got
You're looking
second
for
loan charge.
speed. You're
Yeah,
trying
I
to
mean-
solve the speed problem,
trying to win.
right? You're trying to
Yeah.
solve the speed
Win.
of closing.
Speed, but also winning.
Right,
Because
so
when,
take
you're,
it to-
when you're in
yeah.
competitive market,
Yeah.
the 2 or 3K gets shut down.
Yeah.
Let's not go around the bush. When people
Right,
see
because
it,
the seller doesn't want to.
unless they're desperate. If they're desperate, they have no offers. Then when you guys oh, the
They'll
realtor
consider
is
it.
special. He's not special. The seller was desperate. He had jack shit, and they took you.
Sure.
Sorry.
Yeah.
When they have a demand and there's a line out the door, next. They're not taking 2 or 3K.
If I were a seller, would
That's
I be? Hey, I can't blame them, right? But if my house is in bad shape,
But if they have auto offers,
but if they have
and what
other
about
offers,
and what about client Carlos wants to buy that house and wants a shot at it?
Yeah.
He always got to get the worst house in the in the block.
That's
like,
gonna be
get a shot. Like why not get a shot on the good one? That's why I'm trying to be creative. Let's say why
Yeah.
don't we buy it first, then do a 2 or 3K? You know what I mean? Let's get more creative.
Yeah, if we can
Carlos
pass
will get the
inspection-
best house like everybody else.
if we can pass inspection and avoid renovation financing, why not? And it depends on what kind of market we're in, right? After the 2008 market, it was 203K was all that was being done.
Yeah, but that wasn't because again, I'm sorry, I don't want
No, and this is
Now your
why we're
knowledge,
here.
But 2008, 2008, 2009 was dead, the market, man. Nobody
Correct.
bought.
But-
Nobody wanted even for free.
People
There
were
was properties for literally.
Oh, we bought $30,000 properties out west. It was nothing.
It was
We just
insane.
take them down,
Yeah.
no problem. I get
It was insane. So, but now this market is different.
This market
that
is
doesn't
different.
exist anymore.
It
Everybody
doesn't
wants the
exist.
property.
But at that time, when we were doing, everybody was taking everything with them, right? They were leaving their houses upset because they just got foreclosed
Yeah,
on.
of course.
So they were taking the whole kitchen, the
Yeah.
garage door, and everything with them.
Yeah.
So you couldn't do a traditional loan on
No,
this.
you
Oh,
could
that
not.
wouldn't- they
So
wouldn't
you
pass
had
the
to do
inspection,
renovation
yeah.
financing,
Yeah.
right?
Could not. Correct.
But what I'm talking about, Greg, is let's talk about those listings
Okay.
that realtors are passing up on. Why would you pass up on a listing? Have you ever passed up on
Never.
on a listing?
Not me. Zero.
What about you? No, Sherry. Okay.
Zero.
I've heard of
I
realtors
got
pass
listings all
on
over.
listings because of
can you-
condition.
Can you send them to me?
Yeah. Yeah, right. And I don't understand why. Why do you think other realtors pass
Because
on
they're
listings?
they're cocky, and they have egos, and they think
Yeah.
they're too good.
Yeah.
And they need to go work, and pretty soon
Yeah.
then they will fail. So
Sure.
Yeah.
that's what will happen.
The number one thing I hear is because of condition, right? They'll tell Carlos, "Hey, Carlos, I need you to fix this house. Spend $20,000, and then I'll come back and list it for you." They don't have $20,000 to fix it. So the realtor that doesn't know about renovation financing doesn't know how to market that property.
Well, at XR Realty, we do not pass any listings.
Mm-hmm.
So call us up, Sherry, Greg.
There's
We're
always
ready.
there's always a buyer out there, and again,
Always.
I don't mean to offend all the realtors. Maybe some realtors are in different stage in their life, and they just don't want to do it. They don't want to deal with it, right?
Sure.
They want easy, right? I guess it depends where you're at in life, because sometimes that listing could be challenging and a lot of work,
I've had some.
So
Here's another question for you guys. Why does a property sit on the market more than 30 days?
overpriced.
Yeah.
It's really it's
overpriced or conditions.
dude,
Overpriced
exactly.
or
Yeah,
condition.
overpriced.
Those
Not
are
a-
two.
yeah, not
you're
able to
right.
show.
You're right. I
Right.
agree.
The main one's overpriced though, right? That's the main thing that why they sit on there,
Yeah, there's a
and it's due to condition,
Mostly.
right? It's overpriced for the condition that it's in.
correct, 100%.
And overprice and condition is where the challenge really comes in, and that's where renovation financing really comes into play. Because I'll come in with a strategy, and I'll talk to realtors that are willing to roll up their sleeves and do some work here
On the
with me.
seller side?
On the seller side, I said, let's present this property a little bit different than the way that your traditional way of marketing it. Let's get a contractor out there. Let's put a bid together on those things that the house needs. And let's get a CMA, a comparative market analysis that tells us what homes are selling for in the neighborhood.
I hear you.
Right?
I hear you.
It's another idea. It's another strategy.
So
of
we've
how to
done
get
ones where
sales.
we've helped kind of like bid out those kind of things before, where we're almost selling them like build to suit.
Okay.
Right, so you take those smaller homes,
Yeah.
those beat up homes.
I like that, actually.
And then you're actually selling it. Like we did a lot of like
Yeah.
empty land stuff years
Yeah.
ago, where we would
or
do
even
build to suit.
additions too, like something like you have a ranch, like hey, you could do this.
Right. If the market or the area covers like
know?
an extra
Yeah.
larger sized home and you wanted to put an addition on the second floor,
Yeah.
right? So that the market commands that,
Yeah.
you can bring in a contractor, put together all the paperwork where a buyer could just step into that. Now,
Yeah.
for you guys, that also helps you can market it to a different pool of people, right? If a $300,000 buyer is not looking
You're
at,
right.
like a $900,000 buyer is not looking at that
Correct.
$300,000 house.
I had a question for this guy now.
Yes.
So what is the max they could pull out? Let's say I do have a house listed right for 300,000, but I know the area could also call for somebody that's able to spend 900,000.
Yeah.
And maybe that person he connects with Greg and do the project.
Yeah.
What is his max? Can he buy 300,000 and put a 500,000?
So it's to the ARV, right? It's the cost of the
As
ARV.
long as we're within the loan limits,
Okay.
And the after repair value is there, we can absolutely
You could
put
do it.
$500,000 on that house.
Wow.
Yes.
And what is there? How much they would have to put in?
5% down on the total acquisition. That's where it's not a lot different, Greg.
Total
Like
cost. So it's on the total cost.
5% on the
right?
total acquisition.
This is
Purchase
really good
price plus
information.
rehab.
This
Yeah.
is really good information. So
It's
you
really
you could buy little house 300,000,
Yep.
build a house, beautiful house of $800,000, 8 times 5 with 40 grand.
Exactly. 100%.
Putting 5% down. Yep.
Yes.
Wow.
Yeah. It's a beautiful product. I have
Wow, that's
clients
huge.
that are looking in that $1 million space. They're not finding it. It was, ironically, they're still not finding what they
No,
want,
it's
even
true.
at $1 million.
I recently had a client like that. We were looking.
Yeah.
We couldn't find it. We were in that, $900,000 million.
You're searching for Bigfoot though, man. That was the hard part. You're searching for Bigfoot.
Yeah.
Those Bigfoot ones there's not a lot of them. There's
There's not a
problems
lot.
with trying to, well, there's an investor problem who used to be able to kind of bridge that gap. I used to invest in properties and do those and deliver those, right?
But not numbers.
But there's no margin for us to do that
Where
anymore.
You need to put it at 1.2, that property.
Right. So
You
there's
know,
not enough
to-
margin for us to
exactly.
play in that pool anymore. So
Exactly.
there's not those houses. When
Yeah.
they do come on market,
Yeah.
there's 20 people
Yeah.
because there aren't any. You're searching for Bigfoot. This is another way to get that house.
But what it comes down to is surrounding yourself with a good team.
Oh,
Is that I think what happens a lot of time, a lot of people get discouraged because they talk with contractors there and they get more. Yeah, after they talk with them, they get discouraged. They don't, one guy's too high, one guy's little suspicious, one guy came smelling drunk.
Right.
I'm just saying, I'm sorry. There's nothing wrong.
It's a relationship
I drink too,
business.
but not
Right.
in daylight. you
Right.
know?
Right.
So
No, it happens. Contractors get a bad rap, man, and I think they're.
sorry.
We live in the industry, man. We get it. There's bad industry for us. It's tough.
And I've been through it. That's why I say it. Like I had my painters one time. I would go to the house and they're sleeping on the floor.
Yeah.
They're all high.
I have a story. So
Oh my God, I have so
I have
many
a story.
stories.
But this one is crazy because I had water coming in and we had to open up again after we renovated and everything in the basement. And then in the insulation, all empty beer cans
Oh, nice.
in the insulation.
Oh, fun.
So you know what they were doing in there.
Sherry, we want to know about the juice. You're giving me, what happened with that contractor? Like he took off, like you pissed him off? Like what did you do?
So what happens with
You gave him
contractors?
too many cannolis or
There's some no.
Bring him a sandwich.
I didn't bring him a sandwich. No, I did actually. I made
Did
him
you
food.
feed- you
Yes,
fed
I
them?
fed them.
Oh, I'm sure you treated
Yes,
them like gold.
I treated them like gold.
That was the problem.
You think so?
Yeah.
Yeah, maybe. They kept coming back, but only for the food, but not the work. No, so it was a long time to try to get them back. So unfortunately, it took about a year or so to get him back, and I kept pursuing him. They did some of the work. Yeah, it was a long time. It was during the time also that the market wasn't that good either. So,
I mean, you couldn't just like get another contractor. How come you kept going, like pursuing him? Like
because
wasn't that
like we were just talking about that before you walked in, because once you get another contractor, they don't see that there's enough money left to be able to do the rest of the work. So here, elaborate on that a little bit, because that's what we were just talking about.
Yeah, I'm going to elaborate on some of the
let me
industry.
know. Let me know.
I'm going to elaborate on the industry a
So
little
the
bit.
first guy took most of the money then.
Well, here's the problem is that, like, where do you transfer your profit as a contractor when you get the job? And you're the one giving all the numbers. So as a consultant, I'm supposed to look at it and kind of differentiate, okay, here's where he's putting his margin, right? And some guys put all their margin in the front end and they leave the back end really skinny. So if a contractor does happen to walk because he underbid it in the first place and he realized that there's not enough money in the job, he will walk away and leave the homeowner in a predicament.
Wow.
Because now there's not enough money. The money that's even left is not enough money for the industry as a whole to even finish. So there's some games that some guys play, and I'm actually really congratulate you for getting them back to finish.
Yeah.
Because most of the guys that I see in my consulting work, and even when we take over jobs, they're gone. They're in the wind. They won't answer the phone. They're in a different state. Like
Wow.
they've just
No, I was very
completely
persistent,
evaporated.
but it took a long time. I
It's
was
impressive.
very persistent, calling every day, every week. Hey, you're gonna come back. You're gonna finish. He would send the guy just to kind of keep me quiet a little bit, and then bring another guy another day, and little by little we got it done.
I know, but we got to watch out for that because
Yeah,
for you,
that's hard.
You're more savvy, right? You're a realtor, you're
Yeah.
in business. But imagine a nurse,
Yeah,
you know? working night
nurse,
shift.
yep.
Yeah.
She got to come home. She doesn't know what's going on. This guy takes off.
Yeah.
She's like, what the F just happened?
Yep.
You know,
Yeah,
he-
and luckily it doesn't happen that often, Greg.
Okay.
You know, because
Okay.
we got to be careful not to scare anyone away. But it does. I'm glad you bring it up because
Yeah, of course.
it can happen.
No, I mean
but
it doesn't happen all the time. It just
doesn't.
happened in this situation
Right, yeah.
because I remember the 203K and
Yeah.
how I did that. But all the other homes that I renovated,
Who was the
did,
mistake then? Was it contractor? Was it picking the wrong contractor? Or was it the contractor
Great
being,
question.
being
I think the
being a little shady?
contractor, I
Like,
think
what's
the
going on?
contractor at that time got a little greedy because he kept going for other jobs. I
There we
can't do
go.
it today because I'm starting another job. So that's what happens. Contractor take the job. And then they're going out bidding other jobs and other jobs and other jobs, and they
Got it.
start,
Got it.
and then they can't go back to the first one. So I would love contractors to finish their first job, but but I understand because you need to have backup. You have employees, you need to keep them working. It is. I learned so much about contractors, especially with employees. And that's in every no matter where you are, where you work. If you don't have the good employees and they don't stick with you,
Yeah.
and you don't have another job for them, they'll go somewhere else.
Yeah.
Then you don't have anybody. So
there's-
I mean,
there's a bunch of things that can happen. Selecting the wrong contractor. A lot of contractors don't have a process, right? They're just running, right?
Yeah.
And they're
Right.
they're in this constant thing of solving problems as they come up, right? It's everything's reactionary. And what I say is that like if you don't have, we have a design process going into every contract.
You got a system.
Right. So we have a design process that we go through, where we schedule and cost and do all this stuff to understand what the project
kind
is.
of like in real estate, same thing.
It's just, but it's the same thing as building cars,
Yeah.
right? Like Henry Ford
Right.
didn't just send them down the production line. There was
Yeah.
some work that got put in
Yeah.
together first.
Correct.
When you got to the production, he was able to press go and it just
Yeah.
ran.
Yep.
So the construction could be the same thing, but what a lot of guys fall into is everything's reactionary. It's like, oh, we're done with this.
Yeah.
Now I have to solve the next thing. And that could take time and weeks and months and whatever.
Got it.
And all of a sudden you have your construction job goes from what it should take 9 months to taking 24 months.
Yeah.
Right? Because you're always reacting to stuff.
Yeah.
So I
Yeah.
tell people in the design side of like, yeah, I know it takes a month and a half, depending on your decision times.
Correct.
But like that month and a half could save us 4, 5, 6 months in the construction
Yeah.
in the construction timeline, which is money to you, right? Like you owe every month that you carry this
Yeah.
property without moving
Yeah.
in is a disservice to you. And if you're living somewhere else while you're doing the construction project, it's even more debt.
Yes.
Right? It hurts even more.
100%.
So like it's just finding the right guy that understands that there needs to be a process and how it runs. Anybody should ask the contractor, what's your process?
yeah.
When Greg
Right?
called me the
How do
first
you do
time,
this?
when you called me, I knew you knew what you were talking about because he right away told me about his system.
Yeah.
To your point,
that's huge.
I said, all right, if there's a contract that has a system built,
Oh,
I
it's
know
huge.
that I'm not going to get in
Yeah.
trouble with
It's
these
huge.
contractors.
yeah.
That's huge.
But that's really
What
it.
about talking about living somewhere else? I heard the 203K program also could cover some of the rent or something.
It can,
Some
yeah.
rent?
It's the beautiful feature that comes with the renovation loan,
Yeah.
and FHA just expanded to
As an example,
allow.
if my daughter lives by me, too
Yeah.
long, and she has to, at one point, got to kick her out so she can
Right.
get
Yeah.
203K.
Yeah. You can finance up to 12 months
Sure.
of mortgage payments
Okay.
into
Okay.
the loan. So let's say that, you don't want to pay for two places.
Yeah.
FHA allows you, as long as the
Nice.
consultant tells you or
It has to
tells
be in the
us
numbers.
that the
Yeah, it has
house
to be
is
in the
deemed
numbers.
uninhabitable during
Got
the
it.
construction period, we can
Got it.
postpone
Now,
those
are you
payments.
financing the cost of the construction loan, or are you financing the cost of that you can roll into the loan? Which one is it? Is it the
We're
cost?
doing all of it.
Well, here's what I mean. Is it like you said you can finance in the time frame of you carrying the property into the loan? Is that like, okay, so I'm renting a place, right, to live in while I'm doing the construction on this place. The cost that you're able to roll in there is the financing costs for the property that they're
The
moving
mortgage
in,
payments.
the mortgage payments for
The
that
mortgage
property
payments,
that you guys have
Correct.
the paper on,
Yeah.
right? Okay,
Correct.
Not their rental one over
No.
here. You can't move that one.
Not
in.
Greg's rent. No.
Right. Okay.
Put us up in like the Ritz Hotel.
That's right, yeah, exactly, yeah.
All amenities, everything.
Yeah, all of it.
Massages.
All the bells and whistles.
Oh,
Yeah.
good.
No, it's a nice feature. A lot of people are on the fence on doing these loans because they don't want to pay for two places. So this allows you to have that feature and not have a first mortgage.
And you're also
payment.
not getting charged the interest on the money you don't use either, right? So does it get pulled out? Like, do you only get charged on the interest of the money that you've
No,
removed?
you start paying on the entire balance.
entire balance?
At
Okay.
closing. Yep.
Now the scary part, and talking about money and all that stuff,
Yeah.
right? Somebody could start a job. Let's say we just got a 203K loan. I'm starting my job. My contract gave me the price. And now all of a sudden you got these tariffs that kicked in,
Right.
right? And now all of a sudden all the material goes up. Then what we do?
I mean, it happens. We had to deal all the way through 2020. We worked all the way through it. We were deemed an essential worker.
Okay.
Yeah.
And unfortunately, it just happens, right? Like we can't predict the market
Okay.
of what's going to happen. And unfortunately, we had to go to our clients and say like, things are nuts. I mean, back then we couldn't get pressure treated lumber. We went all over the place.
Wow.
We have things where we have relationships with like really big suppliers.
Yeah.
And we had one that like one of my big suppliers for that said like we just can't get it.
Wow.
And they put me directly in touch with a manufacturer here in Chicago. And I called him up, here's my rep, told me to call you if you can help, whatever. And he goes, hey man, I'm going to tell you, you have a better chance of finding a bar of gold in the city streets than you do of finding what you're looking for.
Oh my
Wow.
God.
And it's just
That's
unfortunately,
crazy.
some of those things do occur, but like you have to, we have to pass them along, right?
So
The market is the
what if
market,
they can't pay?
unfortunately.
Yeah.
What if your seller can't pay?
Yeah, I
stop
don't
it,
know.
you
There's
s-
nothing that we can really.
So you
Those are the
stop the
things that are out
work?
of our control.
You kind of
Maybe we're gonna change the job, right? Maybe
Yeah.
instead of doing the kitchen, you hold off
That's
on the
really
kitchen.
what it is.
And
From
you
our perspective, we
Yeah.
reallocate
You start dialing
funds.
things back.
Yeah.
Right. You start
exactly.
trying to pull things back, and as
Yeah.
long as you're not like really into
You
the
have to adjust.
contract and the process,
We just
like,
got to
if you're
downgrade
doing-
a little bit.
Yeah.
Right.
And reallocate.
Yeah.
Absolutely.
Jose's
as
like,
a
I'll give you
share.
another 20.
That's right. Yeah.
and as the consultant, we can go through there and we monitor. You can change different line items, right? You
Yeah.
can borrow from one line item to another in the
Yeah.
contingency fund and that kind of stuff. We can move money around
Got it.
inside of those things to kind of solve some problems, but unfortunately, 2020 just threw a giant wrench in the mix, and I don't foresee that happening anymore or again. But like,
You never know.
you never know.
You never know.
You just don't know.
Yeah, it's a nice feature. I mean, we always build in another 20% on top of whatever the contractor says. So
Yeah.
if Greg's coming at 100, we're putting 120 away. And if you never use that
20%?
20, 20%, up to 20.
Up to 20.
Yeah, up
Between
to
10
20.
and- I think they
if you don't use
between
it, it
10
goes
and
back to
20.
your principal.
What about the rates? The rates on 203K. What
About 1% higher than where the market's at.
One higher.
1% higher than where the market's at. The idea is once the project is done, Greg,
Refi.
is to refi out of it and into the market rate non-renovation loan.
Okay.
So is the cost rolled into the mortgage of that renovation loan? Or you have to pay the cost up front?
And the refinance you're talking about?
And yes, not
the
the
re-
refinance, on the 2 or 3K.
On the 203K, you got your set of closing costs like you would a
Right.
traditional loan. But most of the construction costs are all built into the loan.
At the end of the day, there's nothing for free.
No, there isn't. No,
So
there
the
isn't.
bank at the end of the day, this is a good
Exactly.
product for
Yeah.
the consumer, but they want to make their money.
I
So
have
they're gonna charge
buyers. Yeah, I mean, I'll be honest with you guys. I have buyers. I've got 15 buyers looking right now.
Yeah.
They haven't found the property.
Got it.
So we're going back to the table. And even though I had a conversation with them about renovation financing on day one, it wasn't until day 31, 30 days later, after they've exhausted all options out there, that they're ready to talk about renovation financing.
Got it.
Because they did pass up on some fixer-uppers.
Yeah.
And now they're looking at those and saying, hey, why don't we revisit those?
Do you see people a little bit more picky now? Like you got this 15 approvals, right? And they go out there, they go in the market, and they're like, just decide in a home, right?
They are.
They're a little bit more picky because they all want the fancy.
They all want they want the perfect home with the lowest payment, and that just doesn't go together. So that's where I think renovation.
But they want the nice
financing-
kitchen right
They
away,
want the
they
right
want a nice
kitchen. They
bathroom
want
right
all of
away.
that. But you know the problem with those, Greg?
So that's good for Greg.
So are
right?
these investors?
No, these are homeowners.
These are homeowners. They're not
these are
investors.
people
These
that
are
are homeowners,
homeowners
right?
that are
Yeah.
looking.
that
Okay?
are looking. Yeah,
Yeah.
and they're in competition. To your point.
Yeah.
The what do they call those? The cream puffs, the properties that are ready to go. How many offers are those properties getting
100%,
right now?
yeah.
Right, a lot.
That's what you were mentioning earlier, was how many properties like you walk in and how are you going to compete in that
Correct.
market if there's that, like you're looking at something that's real close.
Correct.
You have 15 people. I mean, I had a brokerage for a little while, and
Yeah.
open houses were like good if they were like 5 to 10 people, right? I mean, recently we've seen some open houses that have had a line around the block.
Yeah.
And that's
100%.
not abnormal now to have a
Correct.
big, like
Correct.
a big showing thing like that. But when you come down to things, I think as a realtor, I think a good idea nowadays would be to get what I would consider double approved, right? So have them get approved for the finance mortgage. What's the problem? Why not have them get doubly approved? One for the regular purchase,
I agree,
and one for a renovation loan.
And
then they're not having to
up.
chase.
I agree.
Like later on, I found this, and now I got to go back through Jose's whole thing or the whole time frame.
I agree.
And then maybe you're going to lose out on that house.
I agree.
Do it up front.
Yep.
I agree. Or sometimes, also maybe they got to change their mindset, right?
Yes.
Yeah.
They got to hold off on having the beautiful house right away. Start step by step.
Reset expectations. I'm doing that every single day. I know you guys are.
It's really tough though. It's really tough. I think everybody takes everything for granted. In America, we're blessed, but everybody takes it, takes it for granted and want the best thing right away. And you got to work hard sometimes.
Right. Yeah. One
And
step
build
at a
up
time.
little by little.
I always tell my clients, just get your foot in the door. Get your foot in the door, and maybe you won't have everything you want today, but 5 years from now,
You build equity. You have you're paying down your loan, and then little by little, then you'll
get the next thing.
to get the next thing, right?
Yeah.
You could sell it. You could and do better.
Exactly.
So
We were talking about that today, right, Sherry? I started with bologna sandwiches,
Yeah.
and now I get an Italian. What kind of sandwich?
It was a pesto with pesto and
prosciutto.
prosciutto.
We grow up and we get better things, right? But
no, I know. But unfortunately, good and bad. But there is options, with the 2 or 3K. I think I feel like it's huge. We talked about a lot of stuff today.
yeah, I'm glad we did, Greg. I think one thing I'll tell you about the 203K program. It's been around since the Great Depression. Properties were sitting on the market for a long time. They weren't moving.
They've been around since then.
They've been around since then.
I did not know that.
Yeah, and think about
Jose's been around since then.
Yeah, exactly. every purchase or every sale, how many people get employed with every sale? So what you do is important. But think about a renovation loan.
Yeah.
How many people get employed with that? You get contractors hired. You get the Home Depots of the world to be busy, materials, contractors. People get to feed their families. And you start renovating communities one property at a time. That's another big win.
Yeah.
Because the minute that one property goes up and starts getting renovated, all of a sudden the rest of the neighborhood wants to catch up.
Plus the neighborhood too. Sorry to interrupt you.
No,
but
that's fine.
It gains value, right?
Yes.
The one property, and all of a sudden the appraisal value is more, and then the other guy's like, "Hey, let me renovate. Hey, let me sell. Then you got the investor coming in, and it just it's like domino effect.
So on our end, they changed not too long ago in the scheme of things. They changed some things in how 203K loans used to work and how they work now. Prior to about 2000, and I can't remember the date, but I think prior to 2015, it would have never been allowed for us to take any kind of what we would call mobilization money, right? For basically prime the pump, right? We got to go out, we got to buy materials, we got to put things down, we have to get a bunch of stuff rolling on our end. 203K used to not allow us. It was all reimbursement, right? So they looked at somebody to finance or prime that pump. And a lot of people would look at us as the contractor, like, you invest the money in there, right? Which is a little nuts and which really doesn't happen very often. But what we would have to do is we'd go look at the buyer and be like, look, all right, you're priming the pump to get the project moving, and then we would reimburse you along the way as we get draws, and basically you're the one, or else if we have to finance it, we're going to charge a finance cost, right?
Of course.
It is what it is. 203K has changed. They will fund us at closing about 50% of the material cost. So whatever we put in there as the HUD consultant for the paperwork on the 203K loan, they will advance us for the first draw half of the material money. So we have money to play with. We have the money to move the job through. And then we start reimbursing ourselves throughout the job. And that takes a lot of stress off the home buyer and the homeowner.
But I heard even the HUD consultant actually even goes to the job site and checks the material that got purchased, right?
Yeah. So we want to see that if you're saying that you bought cabinets, we want to see that you said because you as the contractor, you fill out what your request is.
Yeah.
Right. And you're filling it out on a line item. Yeah. And you're saying, I want 50% of this, 100% of this, whatever it is.
Like,
as the consultant, we have to go out there and say, you bought cabinets? Cool. Either show me, I want to see the cabinets landed on site, or I want to see a receipt for you paying for those cabinets, right? Because they may be on back order.
Yeah,
right?
we don't want you, you're buying cabinets, you took the draw, and then all of a sudden the cabinets is in somebody else's house.
Right, correct.
That's right.
Correct. So we want to see these. We want to see
Yeah,
these
yeah,
things on
yeah.
materials. We want to see these things completed before we release
So that's
things.
good. That's good for the consumer.
Yes.
You got the HUD Consultant. Is,
Yeah.
is really useful for that kind of stuff.
And I'm just glad that, honestly, Greg, there's not a lot of realtors or real estate shops like these that are doing enough of this.
Yeah.
So I'm really appreciative to be part of this
Yeah, of course.
podcast because I think
Of course.
it needs to be done more. It needs to be spoken about, no matter how you feel about it.
Yeah.
I think the more of us are talking about it, the more that we're going to be able to move the industry.
But also, I think you need the right person,
Yes.
right? For you, like, yourself, like, not that because you're here, I want to,
Sure.
give you too much credit,
I
right?
appreciate that. Yeah.
But
thank
you've been in the business
yeah.
20 years. You
Yes.
got good context. Like,
Yes.
you got Greg. He's
Yes.
a HUD consultant.
Right.
He's in construction. Like, and so that helps a lot.
It does.
Because a lot of lenders don't have these contacts. And so
Yes.
then the consumer is shopping around, finding their own, can't find nobody. And it's hard. So it's hard to have a good realtor, good lender to
Yes.
help them out, make the experience a little bit much easier.
It makes all the difference, Greg, and having that back room operation tight.
100%.
It makes all the. We have the Lamborghini of the renovation
Love it.
Of production because
Love it, man.
we have everything from A to Z on how to get these loans done.
Love it.
If you-
Where's your off? Go ahead, Sherry. Sorry.
No, if he would have said Maserati, you would have had his attention. You said
it's not
Lamborghini, so you might be
I
cut
apologize.
off now.
We
No,
can
I'm
edit
kidding.
that, right?
No
Yeah.
big deal. But remember, I started with a Geo Tracker. So that was my
there we
first
go.
car. So and
Yeah.
I took the Geo
I
Tracker.
had one of those.
Nice.
I had one too.
Yeah, they're fun. And step by step, and then you got the Maserati. But it
Yeah.
didn't happen overnight.
Yeah.
That's
That's
true.
what a lot of people got to understand out there.
No, you
It
work
doesn't
hard.
happen overnight.
Mine was a Pontiac Grand Am.
So, you see?
Yeah, there you go. Yeah.
Nothing wrong. Nothing wrong.
I,
with
I
it.
put in my own sunroof for $800.
I love it.
Yeah, I love it.
I love it.
So,
I love it. I love it.
when you ask where I'm at, I'm everywhere really. But I
Yeah,
focus
right?
more in the
Okay.
Chicagoland market.
Okay.
And I am out in the suburbs, Greg.
Okay, nice.
Yes.
Nice.
But his office is.
Technically, I'm in the west suburb, West Dundee. That's where my branch is, and I also have one in Elk Grove Village and one in the West Loop.
Yep.
So
Nice.
pretty
Yeah,
much everywhere.
But then, of
Yeah.
course, you're on the phone. You
Exactly.
Zoom call, and you
Yes.
meet people. Or, yeah.
All the time, yeah. And free consultation. We do 30-minute consultations with everyone
Nice.
and anyone. We don't pull credit. We don't ask you for any information. We just want to have a conversation.
Nice. Where's your construction company, Greg?
So we're out of the north side of Chicago.
Okay.
We cover, our coverage area is anywhere from southern Wisconsin
Okay.
out to some of the further western suburbs. We also cover out to Schaumburg.
Okay.
So we cover a pretty decent sized area. We don't do much south. It's
Okay.
hard to get down past
Yeah, of
downtown
course.
and through that whole area.
Yeah.
Like, that's a lot of windshield time, but anything kind of like north side,
Just hold
northwest
north,
side,
west
yeah,
side. You're doing a lot.
Kinda
of
covers
stuff.
all of
Okay,
ours,
cool.
yeah.
Good to know. Good to know.
Another thing about Jose, I've met him. When I met you was Wells Fargo.
Yes, I was with Wells Fargo. That's right.
Everybody wants Jose.
Today with Cross Country Mortgage, I feel like that we have, like I said, we have the best of the best to get these loans done the right way. So that's why I chose where I'm at today. So yeah, 25 years doing this, and it's been fun to work with you, Sherry. I've known you forever, and it's been fun to be involved in your projects. And I'm glad that I was out here with Greg. I got
Yeah.
to meet him. Yeah,
It wasn't all
And thank
good
you,
though. We
Greg,
gotta be
too.
honest. We
Yeah.
bumped heads a few times,
little
right?
little
yeah,
bit.
but it was like a brother sister relationship.
Yeah.
But we
Yeah.
got through it.
Yeah, we got through it. We made it.
I guess Sherry has a lot of brothers.
Yes.
You
I got a
know?
brother relationship over there.
I'm not sure,
Yeah, it is.
We love you, Sherry. Don't worry, we love you. And with that, guys, I say thank you for coming up on our podcast. It was awesome. It was
you.
great information. Same here.
Thank you much.
guys. I
Yeah, thanks for
appreciate
having
it.
me.
If you guys
Thank
want
you
to give
for
a shout
having
out
us.
your number and stuff.
Sure. So my name again, Jose Valdovinos with Cross Country Mortgage, the Valdovinos Group, 773-230-4700.
You, Greg.
So Greg with Pegasus Construction, to reach us at our on our business line, which is 773-377-4848.
Beautiful. And then you guys know my number and Gary. So
Yes.
we're good to go. All right, guys. Episode 42 is over. Ciao, ciao.
Ciao.